Good morning and welcome to the David and David on Real Estate podcast. We are today on episode number 94 and we have Elan Weintraub from Mortgage Outlet with us. Good morning, Elan, and welcome to the show.
Oh, good morning and pleasure to be here.
Pleasure having you here as always. You're a frequent guest on the Chosen Life podcast with Jonathan Hakohen, the other podcast that Kormans LLP runs. So we love having you and we love hearing from you and sharing your wisdom and really topical time because there's an upcoming interest rate announcement and a lot of professionals are really talking about this one because nobody really seems to know what the Bank of Canada is thinking anymore, and more importantly, what they're going to do and what their decision is going to be in the upcoming interest rate announcement.
Yeah, it's a bit of a tough one. I think there's a marginal perception that they're going to raise rates by 25 basis points. I think they might take a little bit of a pause, but give very harsh guidance that if things don't change, they would raise them in October. But on a very practical level, unless there's a big change, I think by October, rates will be 25 basis points higher. Whether it's September or October, that's to be seen. But I do expect that it will be 25 basis points higher in the next, 6 weeks or so.
And is it possible that there could be a hike in September and then another one in October, or you think they got to raise it once and then see the effect on the economy? And like you've said before, there's a bit of a lag, right? It's not like it happens day one when they announce it, what the effect's going to be. How long does that take to really flow through the system and figure out if it's having the effect?
Well, so the answer to your question is very simple. Anything is possible. All options are on the table. Now, I think that the US is actually having a massive impact on what the Bank of Canada can and can't do. So if the US, the reality is if they raise rates by 25 and inflation numbers keep coming in high and the US economy is really high and employment is really high, they'll raise rates again. The way that it's actually funny. In Canada, in my life, I haven't really felt what inflation means. I've seen pictures of, kind of second and third world nations where people have wheelbarrows full of money because the money is so devalued. But I wanted to understand it personally. And I have two examples that I forced myself to think about in order for me to understand inflation. So the first example is imagine you won the lottery, David, and you won the lottery, David, and I won the lottery, and we're all high-fiving. We win it tonight. They announce the numbers at 11 o'clock at night. 9 a.m. the next morning, I'm at the Ferrari dealership. And then you're at the Ferrari dealership. And then you're at the Ferrari. And there's 20 people in line because everyone won the lottery. And there's 1,000 people in line to buy a Ferrari. Well, if I'm the Ferrari dealer, it's like, why am I going to sell a Ferrari for $400,000? There's a million customers because everyone has money and money has become devalued. So the problem with inflation is money, it doesn't mean anything. It loses value. It loses the perception and the perceived value. So inflation is a massive problem. It can destroy an economy. It can destroy a country, which it has. Now, the other example, and it kind of relates more to your question, I look at inflation like a forest fire. And with a forest fire, they bring in airplanes and trucks and helicopters of water to get the fire contained. The first step is getting the fire contained and then putting it out completely. So if I have a house and they're pouring water everywhere, I'm very happy they're contained. Well, I might not be happy because the water might be damaging my crops or my plants or my animals, but at least I know they're doing something theoretically to protect me. Now, once the fire gets contained, I'm like, cool, that's enough water. But if there's little pockets of forest fires around, those little pockets could reignite the entire forest, the entire area, and then everyone is at jeopardy. So they're going to keep dumping buckets of water, airplanes of water. They're ruining my roof. They're flooding my basement. They don't care about me. They care about protecting society, the village, the farmland. So the problem with inflation and the challenge with interest rates is they have to not just like raise rates, they have to raise rates till people are like, I can't breathe anymore, I can't handle this, I'm not going to a restaurant, I'm not taking my kids to a water park, I'm not buying jewelry, I'm gonna wait on the TV, I'm gonna not buy anything. And that's really what they have to do. So these little micro raises, part of the problem with the 25s, my theory is, you raise by 25, people get upset, they get used to it. Then another 25, people get upset, they get used to it. There's a big advantage of pulling the band-aid clean off, and you raise rates by 75, 1%. Everyone freaks out. There's 6 months of really bad pain, but then we can start to recover. The forest fire is done. Then we can start to talk about loosening rates. The interesting thing, going back to your question, is I don't even know if the 25 now or October is really the real major question. I think the question is, when are they going to start lowering rates? And they were like Q1, and then it's mid-year, and then it's end. So that's really, how long is this pain going to last? Like 3 months of pain is bad, but 12 months of pain is really bad. And I think that's really the challenge. So all options are on the table. I do think that the US is going to have a big driver, and I could see them raising rates more than once between now and the end of the year. Now, in terms of the other question you asked, how long does it take for these rates to have an impact? Well, if you raise rates today by 25%, that's not necessarily going to stop me from buying that TV, getting that car, going on vacation. It does take time for all of these things to sort of absorb into people's finances. So it can be, 3, 6, and even 12 months before it has an immediate impact.
Elan, my neck is kind of hurting me from bobbing and agreeing with you as you're going and then explaining all this to us. But I completely agree. I think your analogy of a forest fire is perfect, because that's exactly what inflation is. In my opinion, inflation is when people go and spend money and the government keeps printing more money to make sure that we have enough money in the money supply, and it just kind of spreads. So your analogy, like a wildfire, is absolutely correct. And they have to get it all out, and they have to get it under control in order to protect the country, protect the village, protect the currency. But it's not working, right? And the reason I say it's not working is because, when I go to a restaurant or when I go to the store, there's still so many people out spending. I just came back from a European trip, and the amount of people in Europe, the amount of people traveling, the amount of people spending money is quite substantial. And until all that really stops, then we're gonna really start seeing it come under control. But it's about spending habits, right? So I would love to see the government put up an educational program to get people more aware of their finances. And what that, I call it the latte effect, right? The $5 Starbucks coffee 3 times a day, what that actually does to your finances over a prolonged period of time, when you start accumulating bad financial choices, and then your credit card comes in at the end of the month and you're like, why is it $7,000? What did I spend? All I have is these like $10, $5, $6 purchases, but they all add up, right? I call it the latte effect. But we need to get that under control as a society. And I think, tackling it from an educational point of view is also equally important. Like, the government has different resources at their disposal. Monetary policy is just one of them. But there's other things we should be doing as a society to really help combat this. We all have a role in inflation.
Yeah, and you hit the nail on the head, because a lot of people in the Bank of Canada would say that's the only tool in their belt. The only tool the Bank of Canada has is interest rates. But like you said, there's fiscal policy, there's strategic policy. So it's not a one-pronged approach. But and I agree with you, the interest rates hikes haven't been working. I think eventually they're going to work, but from the Bank of Canada's point of view, it's like I look in my toolbox, I have a hammer. I only have a hammer. I don't have a screwdriver. I don't have a saw. I have a hammer. So they keep using the hammer. But it is a broader. I mean, government spending is a massive impact. Strategic policy, and I don't think it's working. I think eventually it will work. But it's the only tool the Bank of Canada specifically really has.
And isn't there also a competing interest? Because, on the one hand, you want to curb inflation and to help settle the economy. On the other hand, you don't want to stop the economy.
Yeah.
Like it's good for there to be buyers and sellers of residential real estate, because every time you do one of those transactions, it's, there's agents that are making a living, but then there's a whole other industries. There's the renovation industry, the home furniture and furnishings industries. So we need that in the economy, because real estate to a large degree drives the economy. So if you stop transactions and people are sitting in their house and waiting for what? Elan, you mentioned, at some point rates are going to keep going up, and at some point, maybe it's next year, the rates are going to start coming down. But down to what? Like, people, if they're waiting for it to come back down to 1.99%, and it's not happening, it's going to be coming down to what? It's still going to be something way more expensive than what they thought about 2 or 3 years ago. Yeah. So at one point, you got to live. You got to decide where you're going to live. You got to make your plan. You got to figure out what you can afford, and then go forward with that plan. Right?
Yeah, I actually don't necessarily think that the Bank of Canada cares too much about the economy, in the context of they want unemployment to go up. They want, the thing that is interesting about the Bank of Canada compared to especially any other government organization, their mandate is very clear. Their mandate is to control inflation, not to make people happy, not to grow jobs, not to build productivity and technology. So their trade-off, and they've said this explicitly, is they will trade off economic growth for containment of inflation. So they want, part of the reason that rates keep going up is that every time GDP went up, unemployment numbers are strong. They want to see, if unemployment numbers start increasing, that will actually help them stop to raise rates. But it's really the economy doing well as one indicator, especially employment, of why they keep raising rates.
Elan, I heard, Grant Cardone talk about inflation, and it was a very ingenious idea. And I have never heard anybody speak about inflation like this. And his theory, and I agree with this, his theory is that the rate of our evolution right now is such that a 2 or 3 or 4% inflation rate is not conceivable. Because his thing is think about how evolution happened over the last 100 or 200 or 300 years. It was really slow, right? If you sent a letter or a check in the mail, that letter took 2 weeks to get, right? Money had to be deposited, took 5 days to clear. There was a process in place, right? Now everything happens so quickly. We can build, and the technology that we have and the infrastructure that we have, everybody's so quick. So inflation is how things turn over, really, in reality. And now things are just turning over so quickly that it's kind of naive to think that we can really control the speed of evolution. Once it gets to an acceleration point, once the wheel starts spinning, it can't, you can try to hold on to it and say, okay, I'm going to put the brakes on and I'm going to hold on tight, but that wheel's spinning so fast.
Yeah.
You look at technology, look at the programs that are coming out, look at, lead generation, look at how marketing works, look at the power that people have in terms of publishing from the palm of their hand. Look at the influencers from Instagram now. Look what some of these top people are getting paid to post one post about something. And look how quickly the information's spreading. I can post something on my Instagram, and if I have the outreach in a millisecond, millions of people know about it. When you talk about the speed of evolution, is it even conceivable that we're ever going to have a 2 or 3 or 4 or even 5% inflation rate out there? Or, is this the new norm that we're going to continue to evolve? Things are going to continue to escalate quickly. And unfortunately, this is the new reality of the world that we're going to be living in.
Well, I think you said two things. One, I agree with. One, I'm not sure I'm bought in on. But, when people ask me my take on the market, I actually think the market is extremely difficult to predict right now. And especially right now, end of August. End of August is always a weird time. People go on vacation, the market slows, sellers, buyers. But now we've got rates maybe going up in September, October. There's a history of rate hikes over the last couple of years. It's a very, very difficult market to predict. And related to that is the speed and adoption of technology. So I use a similar, I build on what you're saying. And, it took, let's say, 70 years for most people to get a television. And then it took 20 years for most people to get a VCR. And then it took 5 years for most people to get Uber. And then it took 1 year for most people to get Chat GPT. But when you overlay the technology, I'm going to tell you, I proudly write my mortgage newsletters with my passion and my voice. But there's a lot of mortgage brokers that go into Chat GPT and they're like, I'm a mortgage broker in Ontario. I'm writing my September newsletter. Canadians are concerned, write my newsletter. And in 5 seconds, the newsletter's built. Guess what? Now I don't need $100,000 marketing guy. And, I can't remember the store, but there was a store where a lot of the employees were striking. And the store was like, cool, we're going to just put in self checkout counters. So, and you talk about driverless cars. So the thing is, the technology, and especially with AI, I don't like buzzwords, but it is what it is. The technology is advancing so quickly. I tell my kids, I don't know if you're ever going to drive a car, because in 5-10 years there might not even be a steering wheel. So think about how cheap it is to have a car with no driver, a retail store with no cashier, a marketing newsletter with no marketing person. Like, the reality is, for all three of us, I'm a big believer in the word catalyst, right? Like, and David Gorski, you might be the winner of all three of us. But, AI is going to solve legal. AI is going to solve mortgaging. Now, real estate is a little more physical, so there's that element. But I think it's inevitable that mortgage brokering and, frankly, law will largely go, automated. And, the good news for David is, well, number one, he might just choose to retire based on all of his wealth, or he can go the complete opposite way. And even with AI, you still need a person to control it. So David's client might come to him and say, I need to lease 100,000 square feet and this and that. And he might get the AI to write the foundation, which might displace, 8 law clerks and lawyers and junior lawyers. But then you need that senior experienced lawyer to actually make it real. But that's actually disinflationary. So again, it's a very, very tough time to predict. And the next 5-10 years are going to be very interesting for sure.
Well, we've been facing that. I know in my profession for over 20 years, 25, 30 years already, when title insurance first came in. Oh, that's the end of lawyers. We don't need lawyers for residential real estate. We'll go to a title insurance system. You won't need the lawyer. Turns out 30 years later, you still need lawyers doing residential real estate because there's things you can't do. I think your business is the same, Elan. Like, how many years ago was it where people were creating these programs? You go online, plug in some numbers here. It'll calculate what kind of mortgage you do. You'll get comparables. You can do it all online. The reality is, yeah, you can get some good information, some good starting points from all that. but you still need a mortgage broker to understand your particular situation, your needs, do projections for you. Everybody's a little bit different, and you guys survive. Like, some of this technology has been around for a while. So
I think that
I'm
the
not as
challenge
fearful
is,
of it.
I think the challenge is that, and again, I 100% agree in today's extremely complicated mortgage market. But I think, again, whether it's 3 years or 5 or 10 years, it'll be like, hey, Siri, give me a mortgage recommendation. Please access all of my bank accounts, all my RSPs, all of my debt, and come up with 3 solutions, including the advantages and disadvantages, and let me know what you recommend. Like, it will be incredibly customized and whatever. So I don't like the tech. The thing is, I agree with you, David. 3 years ago, 5, 10, even today, advice today is incredibly important. I think 5 years from now, give or take, the advice will be incredibly customized with AI.
Yeah,
Wow.
that'll only work if
Point.
everybody's information is uploaded into the system too.
But it is.
You know,
It's all TD, Scotia,
if people are
Tangerine.
organized enough and they get
Yeah.
all their information in a place that it can be accessed,
Yeah.
right? But you know how disorganized most of us are. And when you ask a
Yes.
client, I need this, I need this, I need this, I need this, how long that takes them to actually pull it together and then get it to you in a format so you can do analysis. So at some point, maybe it's all instant risk. Everything gets something,
Yes.
it's going to be available on the computers, and that might change the game.
Yeah.
All right, Elan, this has been fabulous. Great insight on the interest rates. We've got so many more things that we always want to talk to you about. So we're going to continue with another session in the very
Sure.
near future, because we got so much more to ask about you
Wonderful.
and your industry. But thank you very much for being on today and giving us some great insight and predictions for what's coming in the short term.
Perfect. Well, thank you for having me.